So, the close examination of the auditor's responsibility to detect fraud in a financial statement audit is back in the news in a big way. A recent high-profile fraud involves large cash balances included on the balance sheet of an international company that apparently do not actually exist. Public reports indicate that the fraud may involve falsified external bank confirmations. Of course, accusations of deficient audits are being made, and of course, soon to follow will almost certainly be lawsuits against the company and against its external auditor. This seems like a good time to actually review very briefly, what the actual responsibilities of the auditor are in connection with fraud when performing a financial statement audit, as opposed to a forensic audit designed specifically to detect fraud. So we can encapsulate the relevant literature fairly succinctly by looking at two primary paragraphs out of the relevant PCAOB auditing standard applicable to the audit of public companies in the United States. The first relevant paragraph from AS Auditing Standard 2401 is paragraph 1, which indicates that the auditor does indeed have a responsibility to plan and perform the audit to obtain reasonable assurance about whether the financial statements are free of material misstatement, whether caused by error or fraud. So there you go. The direct link of the auditor and the audit process and planning and performing that audit to provide reasonable assurance that the financial statements are free of material misstatement, even due to fraud. But it gets a little more complicated when we look at paragraph 12 of the same standard. However, absolute assurance is not attainable, and thus even a properly planned and performed audit may not detect a material misstatement resulting from fraud. Audit procedures that are effective for detecting an error may be ineffective for detecting a fraud. So there you go. This is where the legal and regulatory battles are fought. Certainly the auditor has responsibilities relating to fraud. That's clear. It's been that way for a long time. Recent litigation has reaffirmed the auditor's responsibility relating to fraud. But again, the literature is clear that the auditor doesn't have an absolute requirement to detect all fraud. This creates what's referred to in the public's mind as an expectation gap. It also creates a gray area of responsibility and of litigation. So the current high-profile matters in the press will play out. The investigations will be done. The auditors will defend themselves, and I'm quite certain that paragraph 12 will have a lot to say in their defense.